So we're just going to spend today talking about deals. So
I love deals. I love talking about it.
You like live and work in Vegas, but you're kind of doing deals all along the Mountain West, right?
Yep.
So let's start with 9075 West Diablo. That one, when you sent over the email, I was like, we got to talk about that one.
Okay, yeah.
Awesome.
So I'll give you a little background. So I've been in Vegas for about 7 years, in the business about 7 years. Came in with a family office, mentor, been doing this over 45 years, kind of across the country. Went into Vegas in 2009, did this project called Manhattan West, which was a half-built, mixed-use project, 200,000 feet of commercial space, 160 multifamily apartments, and a 9-story condo tower he ended up blowing up. You know, they bought it for about 20, spent about 55, sold it for 110.
That's good.
But, yeah, that's a solid deal, right? And had a family office partner, Wells Fargo Bank, with the family office partner who did the deal. But there's this building kind of across the street called 9075 West Diablo. He was chasing it, you know, in the early teens of 2000s, and ultimately some guy bought it.
Yeah.
He bought it with a farmer's merchant and bank CMBS loan, and the guy is more of a passive, you know, family office guy. He does a little active stuff, likes to be in control, made his money in the farming business kind of across the country, and we're like, wow, that's a good-looking building. It's, you know, 3 stories, 67,000 feet, glass,
Office building, right?
Office building, right along the I-215 in Vegas. Like, you're like, dude, this is gorgeous. And, you know, this was about late 2019, 2020 when COVID was going down, so office was like...
A little shaky.
Yeah, a little shaky is an understatement,
Yeah.
I think, right? Like, nobody knew how it was going to go, but this was Class A. Lower Class A, but it was Class A. And so... we acquired 2 buildings from the guy on a seller finance, and we ended up, you know, making money on both of them. And we're like, do we really want this 3rd building of yours? And the guy ended up going, he's like, well, I want to sell it. And I was like, well, and he's trying to burden us with the defeasance payment.
Of course.
Yeah, why not, right? Like CMBS rates are low. This is like when rates were, you know, 3-4%, and you're like, okay, the defeasance is really high.
Yeah.
And anyways, we get to it going where my mentor was like, all right, how about this? We'll do an option to purchase. He's like, okay. And he's like, well, what did you have in mind? He's like, we bring in our property manager. So we see everything. We bring in our leasing team. We oversee all the leasing. The asset was 85% occupied. And we're like, okay, this is the southwest submarket of Las Vegas. Best submarket right now, still is. It's going to end up being the core business district of Vegas. Long growth. Everybody's moving there. And like this could be a winner if you get it right. So we ended up being like, all right, we'll give you $100,000 down with the right to buy it at $20.5 million.
$100,000 non-refundable, right?
$100,000 non-refundable. Yeah. So like it was a little bit of a gamble. But at the end of the day, with an asset like that, was where we saw the upside. We're like, you know, it's a hedged gamble, right?
Yep.
It's a call option. And we're fully overseeing the asset. And we said, hey, you get to keep all the cash flow. We don't take any fees. I don't take a PM fee. I don't take a lease override fee. Like, we're running this deal without any of the true benefit.
Like a nonprofit, basically.
100%. Ran it like a nonprofit almost to a degree, except the guy was getting all the profit.
Yeah, exactly.
And so ends up happening, we lease the entire building. Okay, cool, we get to 100. Well, then we went for the extra where we extended Chicago title. We extended the other, you know, anchor tenant that was in there called KGA Architects. And so now, you know, the key when you sell office is to have as much as a stabilized asset as close to 10 years as possible.
Yep.
You need at least 5 years of WALT to really get the highest value of it all. So, okay, cool, get there. And then we're like, okay, you pay for all the TIs and leasing commissions up to 100% occupancy, and we will take on a reimbursement of the TIs and leasing commissions when we go to strike on the deal. Okay, so we go in. We're like trying to figure it out, like, wow, this is a great asset. Do we want to buy it? Do we want to just, you know, do a strike with a refinance? Is there a lender out there that will do it? We're going to get quotes, like, or do we just flip it, or do we bring in a family office partner to buy it and hold it? And ultimately, we're like, okay, we got, you know, a couple $100,000 because you had to make additional option payments to keep the option going.
Of course.
Because it was a 3-year option. All right, then, you know, one of our office investment sales brokers at Cushman & Wakefield down there was like, hey, I got the buyer. Ends up being this company called Kings Barn, or if you guys don't know what Kings Barn is, they're a very reputable, predominantly West Coast DST, like Delaware statutory trust buyer.
Yep.
And so they love this type of, credit and product. And so they bought it at a 6.75 cap for a little under $26 million. We exercised our option, did a double escrow, and we were all in at about like $23 million for about 5 minutes off $250,000, and made a VIG of about $3 million. And
great.
so that was like 2.5 years.
Yeah.
And so there's the option dealers 9075 West Diablo.
I wanted to talk about that because I know about options just from the land development business.
Mm-hmm.
Like it's super common there. I always try and get non-refundable earnest money, but usually try and get refundable, but usually they want non-refundable. So that's a sick deal. That was great.
Yeah, I think it's just with the options, we usually try to slip in language that always makes a non-refundable refundable. There's always a sentence you can throw in a contract where the unsophisticated, or even some of the sophisticated, overlook. But if you know and you have a really good attorney, like you can kind of weasel your way in there where it's always refundable. Like, oh, I didn't get my entitlements that I told you I was going to get. Like, give me my money back. Or you didn't do X, Y, Z, give me my money back. And that's kind of where I've been mentored by some very kind of language screwy kind of people where it's like, hey, really dive into this to get.
This is not legal advice, by the way.
This is not legal advice at all. I'm not an attorney.
Yep, of course. Okay, so let's talk about 8360 South. Is it Decatur?
Yeah, Decatur.
Yeah. Okay.
So that was two buildings, two-story buildings, 80,000 feet. It was vacant, and we were under contract. We at like about 10-1 or so, and we ended up during our escrow period another office building. This is also in the southwest part of Vegas. So it was before 9075 Diablo. We had our investment sales broker basically position us over the owner user. So we beat out the owner user even though they had a higher offer because we had a better reputation of buying distressed assets in town. And this was kind of before owner users have been very active in office or just getting the highest prices. But this was, 5 years ago where that was kind of new.
Yeah.
Like nobody really knew the strength of the owner user.
I feel like they've come around in the last 2 years really strongly. Yeah.
Yeah, so it's like in the last few years you're like, I want an owner user. Because they can pay way higher than any of us investment salespeople can.
It's like the California 1031 exchange buyer. It's the same thing.
You and I are never going to compete with either of those.
No,
a California 1031 or an owner user, I lose every time.
Yeah, they hate making money. I swear. So.
Or they think about it in a different way of hey, well, the California 1031 is different.
Yeah.
They're thinking of complete tax play, but also the owner users think about it not from a real estate perspective. They think about business.
Yeah.
And the write-offs and everything else. So anyways, we got positioned. Kudos to our investment sales broker there. Also that Cushman broker.
What a beast.
Oh, she's an animal.
Love it.
True. Marlene Fujita, savage.
Shout out Marlene.
Yeah, shout out Marlene. And so anyways, we get positioned. That tenant owner user comes in and says, we'll buy it from you. Don't know what we're paying. We're like, hey, we got this thing pretty baked. We got financing. We don't have financing in place at this time. And dude, they offer us a little over $12 million. Again, another $150,000 deposit. That we double escrowed in about 100-day period.
That's killer.
Yeah, when you could make it happen, we've done quite a few of them, but it's all about understanding the market.
Yeah.
Right?
How are you doing because you're on one path of closing with your own money.
Yep.
So you're probably talking to equity and banks
Yep.
and that type of stuff. How do you kind of go through that process while having someone go buy it from you? Or are you just going to the equity and saying hey, I'm sorry, I have to make $2 million?
Yeah, so that was interesting on that. On the 9075 Diablo, that was just internal.
Yeah.
Because that was not where I had a closing timeline because I had an option.
Yep.
Whereas this one, we had an escrow contract. I had a family office that was partnered up with us, so we actually split the money. So the group that was in, we were they were gonna put up their few $1 million to go put it in with us, but at the end of the day, we ended up doing just a promoted interest of like, hey, look, this is what we did. Like, guys,
Do you want free money?
yeah, do you basically want free money? Like,
I
you
think
guys
that's
did a
the way
little
to
work.
do it.
Yeah,
Yeah.
and so you got to share the pie, but then they remember, like, okay, if these guys can do this, imagine if you actually
Gave
give
them
them
money.
money to actually execute on a business
Imagine if
plan.
I actually invest money with them.
100%. So
Sounds awesome.
you just kind of share that nimbleness. But I mean, dude, that was one of my first deals that I did with the family office I was with, and I mean, dude, that opened up my mind. I was like, what else can you do?
I know.
What else can you do, right?
Yeah. Okay. So you're doing some office, and then we're going to talk about some industrial land up in Reno, Nevada.
Yeah. So I was at a Super Bowl party in February 2019. Everybody's partying, and yeah, one guy's like, hey, you got to meet this guy from Reno. And I was like, okay, I got to meet this guy from Reno. And you start talking. And, you know, I've been at like parties where it's like, all right, like what kind of blowhard or kind of wild
What's
guy?
this guy up to?
Yeah, what's this guy up to? It's this broker up in Reno. He's like, yeah, have you heard of Tesla? And I was like, yeah, I've heard of Tesla.
Heard of it.
Yeah, you heard of Google? I was like, yeah, I've heard of Google. I heard of Apple? Walmart? I'm like, dude, well, yeah, so all these companies like, well, they went up into this park called the Tahoe Reno Industrial Center. I'm like, okay, like, what is it? He's like, it's a 107,000 acre opportunity zone in the middle of the northern Nevada desert. I was like, excuse me? And he's like, this is where Tesla did their 6 million square foot gigafactory. And now they're up to 9.5 million feet of warehouse space. Damn. And that's where the semiconductor truck is. And there's a company called Switch, which does a bunch of data centers. And I was like, I dive deeper into this park, and this park's done by this guy named Lance Gilman and Roger Norman. You know, just so you know, Lance Gilman is not only the county commissioner of Story County, which when this park sits, he also banned any residential development so he couldn't be outvoted. He also owns the brothel there. He also owns the dispensary there. And
This guy's a local entrepreneur.
Oh, dude, this guy, I hope a movie or a book is written about this guy. If not, I will take
Game of Thrones.
Yeah,
basically.
100%.
Yeah.
You know, and so this guy basically in 2010 around there went to a guy named Roger Norman out in the middle of nowhere. He says, we're going to do this, and we're going to put in all this infrastructure into this park, fiber optic cable, above like capacity water, above capacity sewer, and we're going to do an industrial master plan here where, you know it, you're a developer, right? Like, you know how hard it is to get a permit?
It's a bitch.
Do you know how hard it is to get entitlements? Like entitlements, then a permit, then financing, then everything. You know what this guy does? We got a permit in 30 days. We submitted our grading plan, and I think it was 36 days we got a grading permit. And so the story was of how this park got its claim to fame was Tesla's like guy when they're doing the gigafactories, like they're driving around like, you know, Fremont, you know, in Austin, Texas, you know, here in Nevada, and he's like, you got to come out here. He keeps cold calling the guy who's overseeing the search. The guy gets off the plane, and he's like, here's your permit. And like, what do you mean, here's my permit? He's like we're Tesla. Like, I'm from California. This stuff takes months, even though I'm Tesla. He's like,
it takes years.
Yeah, he's like, no, not here. Here's your permit. And then it goes even further where the guy who was doing all the actual oversights and inspections says, I will have my guy do the minimum distance acceptable to the code, sleeping on a cot or in an office nearby for you to get your permit whenever. So this guy would get called at 3 a.m. Hey, we need you to come inspect this so we don't lose construction. Like, they ended up building over 1 million for the first phase, 1 million feet, and I think like under 9 months. Like, it was something unreal. And so it's just like, I'm like, if I'm hearing all these stories, I'm just in the business. I've only done deals in Las Vegas. I was like a cock from my family office partner, and I was like, I want to go up here and find some dirt or just find a project. Go up there, find this 26 acres. We buy it for $2.35 with the money from the 8360 Decatur deal. So we roll it into this deal.
Op zone?
Yeah, and then we did it initially as an op zone. And then, you know, we try to go through and build a 400,000 foot industrial building spec. We couldn't wrap our heads around with where rents were at versus how fast construction costs were climbing.
Yeah.
And it was like one of those things where it's like, oh, is this the right time? No, it's not. Now, no, yeah, And it didn't work out, but ultimately we got a group from Seattle come in and offer us $575 a foot. So for 26 acres, we paid $2.35 a foot, and then we sold it 2 years later for $5.75 a foot. Didn't do anything.
Healthy margin.
I think it was pretty solid.
Who was the group? Was it like a spec developer?
A spec developer.
Cool.
Yeah, it was a spec developer, and then they ultimately built it, leased it,
Probably made money.
Dude, they made money.
Yeah.
Happy for them.
Yeah. Sweet. And then you rolled that profit into 888 Pilot.
Yeah, so that building we bought, that 9075 Diablo, remember how I mentioned there was 2 buildings we did. Did the first deal we did with that seller was 920 Pilot in the Howard Hughes Airport Center in Las Vegas. Did seller financing, had a single tenant. We thought the tenant was going to bail.
Yeah.
Like we underwrote, this tenant's bailing out, they're paying a dog rent, and we're going to re-tenant the building. It's a solid flex industrial office. Like you can't make it for what we're
below replacement cost.
Yeah, below replacement cost. Ultimately, this tenant survives because this weird thing called PPP money, and just basically inflates it. And then the tenant's father dies, and he also gets a bunch of money to just keep his business going.
Sweet.
So we're like, okay, like this guy's not going anywhere, and you can't really sell this on market for a cap more than the kind of what we paid.
Yeah.
Ultimately, we sold the building back to that tenant. Made a couple $1 million. In like a little over a 1.5 year period, life goes on. But we always wanted the parking lot next door, which is about 2.25 acres. And we're like, okay, we really want the parking lot. I go in, it's some Japanese gaming corporation next door that owns it. Yeah, no, it's JCM, but casino, I wish it was Nintendo, and I could have got a Switch out of it, but no.
Yeah. Sounds like you could afford a Switch.
Maybe one day. And ultimately, we go from there, and 2 years goes by, we already sold the asset. They call us up and like, hey, we want to sell the land. And they take out the broker. We couldn't get off market, but we were the ones who were like, we own this building. Like, just give us the shot. Paid $2.7 million for it for 2.25 acres, highest we've ever paid per acre per square foot. But we knew the submarket rips. Ultimately broke ground earlier this year with Burke Construction and built a 40,000 footer. Talking to a couple of single tenants, and that submarket's under 3% vacancy for industrial, freestanding 40,000 footer, we're fine. And it's an opportunity zone deal, so we'd be holding it for 10 years. So
Sweet.
The 8360 Decatur money got traded into the Waltham $2.35 a foot land, which then got traded into this land, into an opportunity zone.
You should do a little flow chart of where the first dollar went. So you're doing all sorts of stuff. You're doing retail, office, land, industrial. How do you get comfortable doing all sorts of asset types? Because that's common feedback that I get from people is you should only do this one asset class and be the best.
We're doing this in a guy named Chris Hatch's studio, and
Shout
that guy
out Chris, by the way.
is the man. And the guy's a drive-through nut.
Yeah.
Chris will beat me every single day a week on a drive-through.
Yeah.
The one thing where I would beat anybody else at is I know the experience on how each of these product types is done successfully. So how do I get comfortable is I learn from each experience of doing a different product type that I bring a different perspective to the table. When you have a narrow vision on just doing one product type, you don't have the comfort level to go do something else. And I believe, if you can do office or medical office, you could almost do anything.
We're not splitting atoms, that's for sure.
No, so it's you get into some of these deals, the land development, we've done water rights, the vacant buildings and flipping them. I've sold shovel-ready developments. We got all the tenants in place and everything, and just ultimately, take the cash and run. Double escrow the land that was shovel-ready, move on. I think it's just risk assessment and understanding your box in your backyard. But that's how it is.
And what markets are you in? You're in Vegas,
Reno, Phoenix.
Yep.
So Vegas, Reno, Phoenix are my core markets. I tried to come to Salt Lake. Didn't work out for me.
We'll get you back.
I'm hoping to get back. I need partners to get back. I'm such a long-term bull on this state and just this market. It's just, the non-disclosure and really understanding who has your best interest in mind. So I just need the right partner. So if anybody's listening to this and they need a deal partner with kind of
all six people that are listening.
Yeah, 100%. Like I'm happy to join in and you guys be the face and we'll kind of bring whatever we can to the table.
Yeah.
And then I'm under contract on a shopping center up in Boise, and we're looking at a couple of things out there, placing offers. Really like Boise long term, and then and we've been in Hawaii a long time.
Really?
So since I've been here, I've been in Hawaii. In the business, I've been in Hawaii, and my mentor has crazier dirt deals than even any of the deals that I described to you.
What are they? Was he doing master plan communities or just like spec houses? Like what was he doing out
this
there?
guy got, he got a surfer buddy when he was living in Miami, and he says, yo, you got to come out to Kauai. And you're like, okay, it's the 1980s. Like, let me make something clear. There's no social media. Mark Zuckerberg hasn't bought any land yet.
Yeah.
He
wasn't even born yet.
Yeah, the chickens haven't gone all over the island yet.
Yeah.
And so he goes out there in the 80s and buys this 30-acre piece of bluff land in Princeville on the north shore of Kauai, and does it on a $250,000 seller carryback for 30 acres of bluff land. Do you think how he made out? He did like 10 years later, guy sold a house to Will Smith that he built on there.
Shout out Will Smith.
Yeah, and then the other one was like Pierce Bronson or something. He sold the other house to, like killed it on both. But this guy would be working in Miami while on Kauai, so he'd be up at 3 a.m., walk like a couple miles down the road. His wife would go get the old like faxes because that's where the internet was, and he'd be on the phone lines at 3:30 in the morning working, and then his workday was done at 2. And he just did dirt deal after dirt deal after dirt deal over there and became, local.
Yeah.
Bro. And then ultimately a lot of dirt, residential, not a lot of commercial over there. And we got a piece under contract on the Big Eye. And we'll see if it works. It's a different world over there, man. But I feel like if I could do something over there that's successful, I get put in a different league.
Yeah, well, it just sounds like all of the hardest parts. Like I'm sure the environmental regulations are brutal, lack of labor brutal. Like
so bad.
It sounds like a difficult time.
Yeah.
But I mean, if you can buy something there, like where else are you going to build?
Yeah, I think ironically, the place is surrounded by water.
Yeah,
water's the hardest thing to get.
Exactly.
So it just moves slow, but if you can.
Okay, and you've got some deals in progress.
Yeah.
Is it ROQ? R-O-Q?
Mm-hmm. ROQ or R-O-Q. I don't. The naming acronyms versus thing. That's why I make them kind of acronyms.
Yeah.
Like spell it out, or say it however you think fit.
Whatever.
But yeah. So from this family office, I started a company with one of the partners of the family office, and another guy that broke off from his family office. The guy I keep referring to, the guy in Hawaii, his name's Benji Garfinkel. He's my mentor, and he's 69 years old now, and he's really taught me almost everything I know in the business, from what I couldn't go out and find myself. And then my day-to-day partner is Devin Sansone. He's 39, and I'm Andrew. I'm 29. So we started this company actually 3 years ago yesterday at the timing
Happy
of this.
anniversary.
Happy anniversary. So, we bought our first piece of dirt together July of 22. This is the ROQ dirt. My partner Devin's like, you just got to buy this dirt. We just got to do it. It's such a great piece. And I was like, I've never done development at this point.
Yeah.
And I was like, okay, like you've done it, Devin. Like, I'll trust you. You know retail. I didn't know retail at this point. I was like, okay, Devin, like we'll do it. Devin teed me up an LOI to a gas company called Fuel Bros or LV Petroleum if you're in the business and know them, and then Starbucks. And I was like, oh, okay, this like while we were in escrow.
Yeah.
I was like, okay, like this retail stuff's kind of cool. Closed on the dirt with a land loan from CrossFirst Bank. Just put in our own cash. So we didn't syndicate, no outside money yet. And then we got an auto shop called USA Auto. We got a pad called for ground lease from Solid and Go. And then we were going spec on 13,500 feet of inline retail.
How big is this space?
It's about 3.85 acres.
Okay.
So 3.85 acres, paid about 4.1 for the dirt. And I didn't know how bad entitlements and really zoning and permitting was. Like, dude, we bought this dirt July 22. We didn't break ground on this dirt until March of 24.
It's a new and exciting experience, your first development deal. Like, I kind of thought you just like walked into a building and just started like arguing with the building department.
Yeah.
I didn't realize like there's like an actual process to do this.
You know what the problem is? It's not even just about arguing. You're arguing with somebody that sees you as a barbarian at the gate
Yeah.
and thinks you have a lot of money. That's not the case.
No, I'm a nice guy and I don't have very much money.
Yeah,
so.
I'm a nice guy. Please don't screw me over. Everybody's trying to screw you over as the developer.
Yeah.
And so it's like, man, dude, whether it's the contractor, the engineer, the architect, the water department, fire department, planning department, the county commissioner.
It's me against the world.
Yeah. And they're like, and all those people think you have enough money to pay them all above what they should actually be making.
Yeah, why not?
And those people that you're trying to argue with are on a $60,000 a year salary, maybe.
With no upside, but more work. Yeah.
And they're all C-level players.
Yeah.
Usually. The A guys get snatched up by the private side.
Yep.
So anyways, we go through this deal. We do the construction loan with a group called AGP Capital. Go through it. We still only have our money in this deal. We worked out a deal with AGP where we deferred the rest of the equity raise, contributed in our dev fee as like outside equity, ended up foregoing the dev fee entirely.
Yeah.
And just we did a pref equity raise because we were greedy. And I was like, I went through all this work for 3 years. None of the investors went out on the entitlement or permit risk. I was like, I'll give you guys all a nice pref, but I'm locking you in and I'm taking all the upside.
Yeah.
So ultimately, Sal and Go during that time said they weren't going to build their building. That was fun. Negotiated a right to terminate. They paid us, a nice, comfortable sum of money over their ground lease.
Yep.
Just went under contract with a dermatologist to go buy that Salad and Go pad. Basically, minus the lump sum that they paid us, I think I would have sold the Salad and Go pad, at this rate with where their capital was going at a mid to high 5, right?
Yeah.
Even though it was a GL, it might have even been a 6 handle. And so basically probably lost 100 on it overall, but now it's weird because you lost 100, but I'm getting that money quicker because I just have an owner user paying for the dirt.
Sweet.
So, kind of going that, pivoting, and then I just got off the phone with my partner. We're now 45% pre-leased on the inline. We'll finish up construction in March, taking out the Starbucks and auto at the end of January, and already sold the gas station back to the gas station user, and then we'll take the inline out probably in June.
Cool.
Hopefully with an exit by the end of November.
And the ground lease or the gas station was a ground lease, right?
Build to suit.
Build to suit?
Oh, yeah.
Was there a reason that you did a build to suit versus a ground lease?
That's what they wanted.
Yeah.
That's what they wanted, but that was also fun. They came in with a change of scope of work on the lease, on the build to suit. So after I closed my construction loan, like 6 months after, they're like, oh, yeah, we got a change order. I was like, okay, change order, like what, 50, 100 grand? Like 800. I was like, oh, yeah, palpitations happening.
Yeah.
All right, okay. And then, but how we structured their lease is if they went above any amount, the rent scaled up and above market return on cost.
Yeah.
So it's like, okay, I had to go do that, but I didn't complete my equity raise until I really was like well underway in the project. And ultimately it made the venture way more profitable and had a higher yield on the entire thing.
Silver linings, right?
Dude, silver linings. If you can, I think that's the thing like a lot of people don't understand about our business is whether you're just an operator, like a value add buyer, stabilized kind of guy, or a developer like yourself. If you can't pivot, and
what are you doing?
You're screwed.
Yeah.
You can't pivot. You're screwed. I don't care. Like if Taco Bell, has their 15-year lease. Well, dude, guess what? You better look inside that lease for that dark clause.
Yeah.
Because another location might come up in a power center where you had it in a strip center. Dude, they're going to go to the power center every day over your little strip center. And if they can find a better location, there's some corporate lease provision, and they're going to bail out on you. Yeah. What are you going to do? Are you buying it at a cap? Are you buying the real estate rate? Like, is it above market rent, inline market rent? Like, what is it? So ultimately, we'll be gross selling out of that, but I'm very happy.
The strip center, so it's currently 45% leased, you said. Mm-hmm. And how did you do this strip center? Was it just like, we can fit 13,000 square feet on this? Or like, what was kind of the thought process on the design of the site?
Yeah, so for us, the strip was always in the back, and it was the gravy. in
Yeah.
my opinion. Like, you do all the pads just to make the deal work, and the strip's really like where you get the juice.
Yep.
You know, I think a lot of people, equity or even just lenders that were traditional banks, didn't want to go with us, even though I had all the pad leases. I had no leases for the strip. And the strip, I believe in small bay retail because it's American entrepreneurism.
Yeah.
You know,
Never bet against the American economy.
Never, you know? And so for us, we were taking a look at it, and we're like, okay, the submarket's 2% vacancy factor. Okay, it's tight. It's also in the Southwest, like, again, growing, tightening.
I'm from the Northwest.
Yeah.
Not as nice.
Yeah, I didn't know how to say. But you go through it and you see, okay, tight vacancy, in small bay, it's like under the 2,400 square foot tenant. It's theoretically not available. The only thing was the rents that you're going to charge. So we made the deal work at $40 a foot.
Yeah.
So I was like, okay, if I get $40 rent, I'm doing solid. Ultimately, I think we will blend out around $47, $48 a foot on the rents.
Were there any drive-thrus?
No drive-thrus on
Wow.
the strip.
That's
No.
impressive.
Yeah, and so no drive-throughs, straight, like, we have a dentist for $2,400, I got a barber for $1,200, and then we just signed a high-end Wagyu sushi restaurant for the other $2,400.
Sweet.
And so for us, we're stoked about it. I think there's a patio space. Ultimately, when we were originally looking at it, you talk about the design, we had 15,500 feet, but the parking was getting a little tight. And so we dropped the interior of that and did this like nice covered patio, and we'll probably have 2 restaurants at 2,400 feet each.
On like the barbells?
Yeah.
Yeah.
Right there. And then, dude, a nail and a hair, like
Yeah.
a female hair salon, not a male barber, and I'm leased. And
Yeah.
so, like, dude, we're not really tripping on it as much
Sweet.
as we were.
That's awesome. Let's talk about Foothills Corporate Center.
Oh, dude, this was another market expansion for me. So I like seeing different markets because, like, Vegas was tightening and there was just so much California money coming in. And I was like, how do you be competitive? And I was like, what's Phoenix like? And I was like, dude, this place is big. This Phoenix is massive. I've been looking there since 21. I didn't do my first deal until June of 22. When I went there, I drove in the car 10 hours a day for 5 days straight. I'd put in an address, meet a broker, and I'd try to go back to another spot and get lost on purpose. So whenever I go into a market, I go in, I say, hey, I'm going to go meet Tanner at XYZ, or at like 123 Main Street. And then I was like, all right, I got to get back to my hotel. I don't care if it takes me an hour or 2 hours. I got to figure it out of where the interstate or the freeway is just by looking on a map. Mm-hmm. And by that, you discover how these different communities function a little bit better. So researched a lot for a year, made my first trip out on a business side, and then it took me about 9 months to close on Foothills Corporate Center. Not from I was under contract for 9 months, but just finding the right opportunity. And so it's 111,000 feet. When we bought it in June of 2022, that's like when interest rates were starting to rise.
This is office, right?
Yeah, dude, it's single story back office call center space.
It's like the most Phoenix building I've ever heard
Oh,
of.
100%. And so you're like built like 1999 or something like that. And I was like, okay, around a bunch of retail, has I-10 visibility in a submarket called Ahwatukee, which is just South Tempe, which rips, close to the airport. I was like, all right, okay, industrial's hot, like as hot as hot.
Yeah.
And I saw this as an idea. I was like, there's a lot of logistics space being built, not enough flex space, and industrial flex specifically. Yep. And I was like, these guys need power. Back office call centers have it because of all the IT and infrastructure.
Didn't know that, but that makes sense.
Yeah, right? So we bought it for about 144 a foot. And it was 70% occupied with this back office call center tenant. So I had cash flow paying my debt. And we converted the 40,000 foot vacancy into flex industrial. We went spec.
How'd you lay that out? Like, is that 70% office, 30% office?
We did, out of the 40,000 feet, I had about 2,500 feet of office.
Okay, so mostly warehouse.
Warehouse, and you put in roll-ups in the back.
Yep.
So, okay, we went it. I thought I was going to lease up like that.
Yeah.
Always in your models, forecast a longer lease up. And I love brokers. Never trust a broker.
Smart fellow like yourself, you'll get that leased in no time.
Yeah, 100%. You guys are hustlers.
Yeah.
You guys are doing this spec and nobody's doing this yet. Okay. 9 months after I thought I was going to have a lease signed, we land a tenant at our market.
Single tenant?
No, it's just for the 40,000 feet.
Yeah, single, but for the one.
Yeah, single for the one. Going through it, get the lease done, kills it at above expectations of what we're going to do because we amortized some TI above what our starter package was. That 70,000-foot tenant, we underwrote them 50-50.
On remaining?
Yeah, on remaining. Yeah. I was like, dude, we really grilled into them. Got to the corporate head. They had 11 locations across the country. They loved Phoenix. This is still kind of in COVID. The office was dead. We're like, okay, are you guys going to come back? We're coming back. We're coming back. Okay, what happens if they don't come back? 70,000 feet's a lot.
Yeah.
And they're signing renewals in other markets. They're signing expansions in other markets. I'm like, okay, true 50. I don't 50-50 is kind of BS a lot of times. This was to us a true 50-50.
Did they tell you they were re-signing in other markets, or did you?
Yes.
Okay.
No, they told us, and then we knew it as well. And they said they loved the location. It's a core market focus for them. Their HQ is in Tucson. All right, okay. Go through it. And after this 40,000-foot tenant comes and signs, they say, we are not renewing. A year in their lease, they had a year, right? To say, hey, we're renewing or not. That was per the lease.
Yeah.
And you go through it and you say, hey, this is what's going on. And ultimately, that 40,000-foot tenant took 15,000 additional feet. So that 40,000-foot tenant grew into 55,000 feet. Okay, great. Into that back office call center space. All right, great. Ultimately, we just now signed a lease for the other 55,000.
Sweet.
And they saw what we did spec. And they're like, you guys did this? Yes, we did. We believe that you can actually do this.
So you're doing it to suit, I'm guessing?
Yeah.
On that?
We're doing it to suit. We got a landlord TI allowance thrown in there, landlord scope of work. And ultimately, we just signed them on Christmas Day. We got the lease signed.
Merry Christmas.
It was the best Christmas gift I've gotten. The best Christmas gift I got in my life. So we, that will be great. So that tenant that was in there that's now vacating, they stopped paying rent in January 2025. This new tenant starts paying rent January 2026. We gave them a year of free rent.
How are you financing this?
I was a bank.
Yeah, and you're just going back to the bank hey, change of plans?
Yes.
Okay. And how did that go?
Solid.
Really?
Yeah, so the reason is we've done my advice to anybody, not legal advice, deal advice, the big banks suck. The Wells, the JP Morgans, if you're having issues, go find a relationship bank and go find a deal maker at that bank. We got a guy across First Bank. You hear this name several times now in my voice, finance the 888 pilot project, across First Bank. Finance Foothills, across First Bank. Who financed Rainbow Quendo land loan, didn't do the construction, but did the land loan, across First Bank. Helped me on a couple other land loans, across First Bank. And so
let's get them to sponsor the pod.
Yeah, 100%. That's what I think I got to do. But what I'll tell you is he's a deal guy.
Yeah.
And, it was good news money. He was like, hey, we're going to have a debt service coverage issue coming up on this deal. But it's listen, I agree we have a debt service coverage issue. But at the end of the day, we'll make the capital call that we had to do to fill the gaps of what was going on through that deal. But ultimately, we made the capital call. It wasn't painful in retrospect of the entire deal. We bought the deal for a little over 16. We'll probably be in it another 6 because we used all the cash flow to bank it and also pay for those TIs, the above market TIs or any leasing commissions. Plus we also had good news money reserve. We'll go back to him and we'll basically say, hey, we got this good news money. Will you just fund it? And he's like, I'll blend my loan because his rate's at a mid 5%. In this market, he's actually a mid-8 lender. And so we will blend and extend the current loan with the new dollars. So we'll pay a fee to do the good news money at a higher rate. So that's how it works for him. And ultimately, banks and all these lenders do not want to own assets. They're in the business of lending. They're not in the business of owning. So when you go to a bank and deal with that issue of what you're talking about, is they know we're on top of it. Any issue, we're proactive in any issue. We disclose issues to banks. We work around them. We come to the banks not just with issues, but issues with different slots and paths of solutions. So any operator or developer out there that's proactive will, get a better understanding of it. We came to you with this pitch. Market's still good, but ultimately we'll be in that thing around 22, and the stabilized NOI is about $2 million.
Feels good to me.
I think so. We bought it June of 2022. We're going in 25. We'll probably sell it on a forward cap rate. Sometime in 2025, we'll bring it out.
Sweet. Do you want to talk about Avondale Commons?
Avondale Commons. This is a great one. And, my partner always says, Andrew, he always he doesn't throw it in my face, because I love my partner, Devin. He's the man. And we actually met at the gym and same type of lifestyle. And Devin, always told me, Andrew, because when you do a development, you're in a different league. And I was like, what does that mean? It's just a deal. I was like, it could be apartments where he's like, no. If you can execute on a development, you're perceived differently in the marketplace. Didn't understand it until recently because of how hard a development actually is, as you know. And so because of that project and because of all the retail we've been doing, and Devin's done 1 million square foot mall redevelopment, pads, small bay, all over the board. And, I'm more of a cap stack kind of guy and business plan contract guy. And I got a call from an equity broker out of Brooklyn, New York. He says, Andrew, come and link up with these guys down in Phoenix. And I was like, okay, yeah, link up with them. Kind of go through their whole pro forma, point some things out. I was like, that's not accurate. I don't think you're thinking about this right. They're more multifamily guys. They bought this 22-acre site across from the Children's Hospital off the I-10. I was like, growth, real estate, still some farmland around them. But they have 324 apartment units going up next door on this 22-acre piece. So they're finishing out the 324 units. We ultimately are partnered on the 6 acres now. We'll be breaking ground probably at the end of February, early March. That deal got dropped on my desk in October.
Sweet.
And I'm taking the same lender, the AGB Capital lender that I did in Vegas on that ROQ deal, and we're putting them on this deal. So we bring in the debt. We'll be raising some equity on it on this one, do a little deferred, but same kind of program we did on ROQ. Have some good drive-throughs going there, looking at a couple good junior anchors, but ultimately lifestyle on a hard signalized corner off of interstate. You can't go to the other 2 exits because they're filled out. Traffic's good. Demographics are good. I think we'll be very successful. I think the project will be around the low 20 million range, worth up in the upper 20s.
You don't have to go into great detail, but how do you structure that JV? Is it you guys?
I'll tell you a little bit about it. Can't tell a lot of it about it on a podcast. Happy to do it off.
You've
off
told
screen.
plenty of stuff before.
Yeah,
so
but I think ultimately it's who's bringing what, who's doing what. They have the dirt. They're putting the dirt, and they have a land loan coming due. We're like, hey, we can help with the land loan with our construction lender. So that was pain point one. When you negotiate these JVs, who's bringing what, and do they uphold to what they're doing? And so, we know retail, we know leasing, we know commercial real estate. We saw that that's not what their strong point was. Their strong point was multifamily and these master plan, bigger scale developments. And we hope to continue to grow this and be their commercial partner on several different sites and deals that they're working on. And they're actually, you mentioned about Salt Lake, they're based in Salt Lake. And my goal is to go, 100%. Yeah. And my goal is to hopefully, hey, we can be such a great resource and this can be such a great experience together that you guys just do your multi. I don't need to be involved in that. But we will help you on the commercial side. So for us, they're a contractor. So the contracting is underneath their holding umbrella. So it's all right, they're the contractor. They've already been in the dirt. They are capable people. They can be creative. They can be very fair. We, went deep on them, and they took it. And, we're like, hey, I was like, oh, you guys can play ball. And so ultimately we came in and said, all right, we came up with a split, but we'll be splitting everything 50-50 on the upside. But, we'll be bringing in and spearheading the investor raise, but they'll also help out with some of their investor base. But ultimately, our goal is to bring the debt and bring the leasing expertise and run that, and they'll run the construction, and dude will run the disposition.
Sounds like a win-win.
I think it is.
Yeah.
You know, I'm very excited. You know.
Well, this has been fun. We talked a lot about a lot of deals. So,
dude, I love talking deals, man. It's just it's fun, right?
Yeah.
Like you can do all these different things, and ultimately, you know, some people have said they wouldn't invest with us because I'm not a one-trick pony. I'm not just doing single net lease retail. I'm not just doing suburban office. I'm not just doing ground-up industrial or infill podium multi like Class A, but at the end of the day, like, you get to meet different people.
It's the best part.
That help you do different things. And it's, you know, led us together to do this, and I'm just very grateful for it all, you know. And I want to keep partnering up with good people, because when you look at the super rich people, right, they've backed people.
Yep.
You know, like I don't need to know everything. Like, Tanner, I don't need to know everything about Northern Utah retail development. Like, dude, but like, do you need help on a cap stack, or do you need help on something else? Like, that's where I'm here for you, dude. And like, sometimes you just also offer free advice.
Yeah.
Because you just have such a passion for it. And people are like, I have like a philosophy on relationships. It's not what you can do for me today. It's what you can do for me 10, 20, 30 years down the road. Because you're going to be successful. A lot of the people you talk to are going to be successful. Like, I just know it. And, you know, it's like, God willing, hopefully I'm going to be successful. But you find these people and put your best foot forward, like, right integrity, and it will eventually come.
Yep.
You know, I've been doing it 7 years now. Now finally starting to really hit some stride.
Overnight success.
Yo, right? How long have you been doing it? Right?
7 years, yeah.
Exactly.
So.
And now you're like really grinding it
Yeah,
out.
now we're really making moves here. Mm-hmm. But let's end it there. That was great. Thanks, man.
Dude, thanks. Really appreciate it.